Hey, you guys, Tricia Turner here. It is Tuesday, 12 o'clock Central. We are Facebook Live. This is Walk Away Wealthy podcast. And the purpose every week is to bring you guys wisdom, knowledge, like how can we help you grow your business, improve your life. And the real estate market, of course, has been a huge focus of ours, A, because we're in real estate, and B, because it's all over the news. And so every week I've been trying to bring you guys an update from different cities and what is the market doing in Vegas and what is it doing in Houston. And we're going to continue doing that. But we really haven't talked about the commercial market at all yet. And that's all over the news as it should be. And so I thought no other than a friend of mine, and he is a commercial expert, Mike Wong. He's with KW and he's been doing this forever. And I thought, my gosh, we got to bring him on and let's hear some insights. So welcome, Mike.
Absolutely. Well, thank you for having me, Tricia.
For sure. So for those people that don't know about you and how long you've been doing this, let's give them a little bit of a backstory, if we could, please.
Okay. My name's Mike Wong. I am a commercial agent, pretty much exclusive commercial. I just do a little bit of residential for my own single family portfolio that I have, but I've been doing this for about 15 years in commercial brokerage. Before that, my background's architecture and development. So I came from an understanding of how much it costs to build things and what it takes to make them profitable and lendable to get the projects going.
Love that. And you guys, he's heavily involved in growing and educating and the well-being of the industry. Can you talk a little bit about that, Mike, too, about all your affiliations with your organization?
Yes. So I'm highly involved in the Asian American Real Estate Association. They kind of pulled me in at the very beginning of my career. I'm the immediate past chairman, so my responsibility there have kind of gone down. But I like giving back to our community. I like making sure that our agents have opportunities to grow, to either learn what I do or get to where I am and even get better than me. So she's operating at our best.
Okay, good. I think we froze for a minute there, but that's okay. We're back. So Mike, and like I was saying in the beginning here, I'm obsessed with the real estate market and I'm paying attention to what's going on. And I know when we first got hit with COVID and, things shut down and then people were starting to work from home because they couldn't go into their offices. And there was rumors going around about, what is this going to do to the commercial industry and office buildings? And we're going to see office buildings sit vacant. And now it's been 2 years and it's kind of been a roller coaster ride. Can you kind of walk us through what you've seen, like when COVID hit and what happened to the commercial and now where are we?
Sure. So COVID might trigger me. That's my PTSD of every commercial real estate agent right now. You mentioned offices, and offices took a beating during COVID. Everybody had to work from home. A lot of companies had to give up space and they couldn't pay the rent. A lot of companies didn't make it. And so Houston is currently one of the worst office markets in the United States. We've got an abundance of empty office space. We just had Greenway Plaza default on their loan. And there's about 20 other office buildings I know that are struggling or about to default in our Houston market. So it still hasn't recovered. Throughout, if you look at the different sectors of real estate in Houston, we've got office, we've got industrial, we've got retail and multifamily. Retail took a little bit of a hit, and it's just because people weren't going out or they weren't allowed to go out. And so, you had these restaurants, these large shining areas, these open spaces, and they weren't generating the revenues they were used to during pre-COVID. And so, everybody's kind of adapted, everybody's kind of working from home. Office is still struggling. A lot of those restaurant clients before COVID, the rates in Houston were climbing on rents. And so a lot of people were cutting back on how much space they're doing. And also with the rise of like DoorDash and Grubhub and Uber Eats, a lot of people are ordering takeout now.
Yeah.
And so a lot of my restaurant clients, they were downsizing before COVID. And so when COVID hit, they were the best prepared to survive because they didn't have high overhead with their rent. The other restaurants that had a lot of space, those were the guys that were kind of struggling. They were used to having those large gatherings and large family tables. They weren't quite getting it. And so those are the ones that are hurting a little bit. multifamily because they're in residential. I know, we had a bunch of stories on the news about rents increasing in the area. Um, and Houston, our industrial is booming. We're a port city, and we can't get enough warehousing here.
It's crazy when you see that. And so when you're looking at like the market now, of course, everything shifted last year, like we were talking about before we came on in June when interest rates started, they're climbing and they've been climbing.
Mhm.
We're at an all-time high. People are freaking out. And especially like when you look at, spending millions of dollars on a project, that's a different kind of a payment when you're looking at a 3% interest rate or an 8%. And so when you look at like June of last year versus where we are now, it's August, basically 2023. What have you seen in the market? Have you seen it improve on the commercial side? Or are you seeing it kind of stale? What are you seeing?
Oh wow, Tricia, I didn't know you were going to trigger me so much on this podcast. um,
Real.
it's a different environment with these interest rates. I was watching CNBC last week, and it said we're at a 22-year high for interest rates. Um, we went from 4% financing, 4% to 5% financing on commercial deals. Now we're at 7%.
Yep.
And so, a lot of these things are refinanced every 5 years. And so a lot of these owners are going to be shocked when they've got to refinance. The other thing is new construction projects. We're now looking at higher rates for financing. We're looking at increased labor costs, increased material costs, and increased insurance policies for these properties. It's handicapping development where people are a little bit more hesitant. You've got to bring a lot more capital to the bank to get a deal going. And we used to be able to move dirt within about 6 months on a project. Now with the underwriting and everything going on, it's taking about a year to get these projects kicked off. And
Wow.
that's a little scary when you're predicting, hey, when am I going to get this product on the ground, and what kind of environment and economy am I going to be in when it's ready?
Yeah. And when you
Yeah.
look at like even in the like subdivision areas where we've got like you were talking about industrial warehouses, they're booming like crazy and they're building them like crazy. Yet financing doesn't seem to be a thing with them. Why is that? What do you think is the big draw here in Houston for all these warehouses?
Our we're the fourth largest city right now in the United States, and we continue to grow. I saw a report. I think it's U-Haul or who puts out that report that about 200 people a day are moving to Houston alone.
Okay.
And I forgot what the statistic is for all of Texas, but they're saying about 200 people a day are moving here. That's pretty significant, right? Where we already have the housing shortage.
Yeah.
Harvey, it wasn't just a breakdown in our logistics, it's a breakdown just because we're flooded and underwater for a few days. But, when you look at the store shelves being empty, you look at us not being able to get our supplies and what we needed, that just shows we have an abundant population here to serve. And it's growing. We've got to get those warehouses out here just for our basic essentials and then our services we provide. Houston's attracting a lot of companies. Texas is attracting a lot of companies. Tesla is still building and just right outside of Austin. That's a major, major factory, right? And you just got to think about everything that pops up around there to service Tesla. Our port is expanding as well. And so there's going to be a lot more companies looking here to kind of get in near the port to service those companies as well. So we're in a good position in Houston.
I love to hear that. Number one, that's very positive because there's a lot of negative stuff going on. When you
Mhm.
look at multifamily, of course, we're in a housing shortage and housing inventory shortage. And so, especially during COVID, like there was no inventory. And so it was a seller's market. Naturally, the apartments were filling up because a lot of sellers were selling their home and capitalizing on that growth and that equity. And then they couldn't find a home to go into, of course, so they became apartment renters. So you saw apartment complexes fill up. However, when you look all over the Houston area, I'm noticing, especially within the last 6 months, they're not filling up anymore. In fact, they're building like crazy, overbuilding again, and they're struggling. And now you're actually seeing rents decline for the first time in 4 years. Are you seeing the same as well?
I don't follow the apartments as much, but I know we've got a lot under construction, right? And on the from the institutional investor side, the nice Class A state-of-the-art apartment complexes you're seeing around town, for those owners, they're generating about 4 to 5% return.
Yeah.
And we're at inflation of what 6-7%, interest rates at 6-7%. So it's not making sense from the institutional owner investor side. I think for the housing side, the reality is we all need a place to live, whether it's a single family home or multifamily apartment. Um, I think that market's going to struggle a little bit just from the investment side. We've got, the returns on the Class A brand new facilities just too low. The last few years, we've had a lot of people and a lot of syndications jump into multifamily investments, and they're going to get caught during that refi when that comes up as well, when those rates are a little bit higher, but also with the cap rates declining a little bit.
Yeah. And when you look at it, I think a lot of people, number one, they don't understand commercial investing and financing and what are the terms, because a lot of people think of it as a fixed rate, like in residential, where it's not. You're not in a 20-year and 30-year note. And so I think, like you said, there were so many people making a lot of money and they were investing in commercial and doing projects. And then as this time goes on and their notes come due or to refinance those, what are you thinking is going to take the biggest hit? What kind of market? Is it going to be multifamily? Do you think it's going to be office warehouse space or office space? What's your thoughts?
We're already seeing the office space showing cracks and starting to bust. That's what we're expecting the most. Just people are no longer going to offices anymore, right? Companies realize, hey, they're just as efficient at home. We don't have to pay all this rent. We don't have to take up all the space, and that's overhead they can get rid of. So, office, it's starting to show cracks, and there's a few buildings that have, like I said, gone under default in the Houston area. I think some of the Class C multifamily, some of the Class B is going to be the next area that's going to struggle. The Class A, those are institutional owners, your insurance funds, your pension funds, things like that. It's Wall Street money where they have to spend it.
Yep.
For the individual investors or the groups of investors, like you said, I really think they're going to get blindsided when they have to refinance these properties, and the rates are much higher.
So when you look at like the United States as a whole, I know a lot of times like California gets hit in a lot more areas than we do. Florida is taking a beating right now because of insurance rates. Our insurance rates here have like tripled. Are you seeing that affecting the Houston market as well for commercial insurance?
Yes. The main things affecting commercial properties in Houston have been insurance and taxes, right? And that's across the board for everybody. We've seen, I've got a property on 249. I think the assessment almost doubled in 3 years. We've seen an office building in the Galleria, the assessment went up 300%.
Wow.
And so, yeah, it's insurance. You've got some owners out there that say, well, my building's paid for and I'll self-insure. I don't need a policy, but taxes you can't hide from. That's due. And so there's no way around that. But yeah, insurance is going up. Conversation I had with one of my tenants yesterday about their triple nets are going to change next year. And he's asking me, why is the increase so dramatic? And I said, well, we've shopped insurance and the best I can do is a 35% increase. And, he looked at me and goes, what do you mean that's the best you can do? I said, well, everything else is 40, 42, 47% increase. The best policy I can get was 35% higher than last year.
That is insane when you look at that, because I think especially right now people talk about a recession and they're like, well, we're in one right now or we're not in one right now. But the facts are that like we're in the housing industry. That's where my world is. And we know the housing industry is very much slowed down. And when that slows down, people are spending less in a lot of other things, vacations, shopping, restaurants, bars, all of that stuff. And in the commercial, what people don't realize is, these people that are renting space or they own buildings, they've got to do a certain volume of sales of transactions in order to pay for their overhead. And we're just, in my opinion, seeing kind of, there's really nobody soaring. Everybody, I believe, is kind of struggling in one form or another. How about you?
You're absolutely right. Before COVID, a lot of businesses went out of business immediately during that period. And, I try to explain those were businesses that were struggling before. They were hanging on by a string and COVID just totally wiped them out. But COVID really stressed a lot of businesses, and it stressed a lot of cities as well, on the revenues from those sales tax revenues. And so, it had an impact. If I hear cities telling me that they're still recovering from the sales tax revenue deficit from COVID, I can't imagine what all the businesses went through that pay that revenue to the city, right? So yeah, there's a lot of struggle out there. You've got, the overhead, you've got increased delivery costs, fuel costs, labor costs, supply costs. It's hurting everybody, and there doesn't seem to be any relief in sight.
No. And you know what I've seen an overabundance of that is hitting the market are those office condos for sale. Are you seeing a lot of those as well?
There's a lot of those for sale. They make sense for the right people.
Yeah.
A friend of mine's actually a developer of those, and he slapped my hand when I looked at one and told me, don't ever invest in those. Just buy them for the people who need them, right? Your doctors, your professionals who need an office space, but they don't. If you're a doctor and you're going to practice for the next 20 years, it makes sense to buy one of those than to lease a location for 20 years. Doctors, you're our best tenants, right? You open your practice, you never move until you retire. And so buy yourself an office condo. Don't go out and sign a lease in a retail center for 20 or 30 years. That's who those things make sense for. Accountants and other professionals like that. Same thing, buy your own building. Don't get into those long-term office leases. But yeah, you're right. There's an abundance of those. My friend he's actually closed on some land to build some more. And they're a popular product for the right people.
They are. When you look at like the history of commercial since you've been in it this time, have you ever seen anything like this in the industry here in Houston?
I started in 2007 and I got hammered in 2008. It doesn't quite feel that bad yet.
Okay.
I don't think we'll have another 2007, 2008, but now buyers are coming with more equity for their homes on the home side, and on the commercial side with the lending, the feds are proposing some changes to commercial lenders that's going to require them to have more reserves and capital, and it's going to tighten up their lending requirements. It's good and bad. It's going to make it harder to get money, but it's going to make the deals safer. So we'll see how that affects the market with those new lending requirements and how those are implemented, or if they get 100% implemented into the system.
So when you look at that, like in 2008, I was a lender during that time for residential. And so the banks would want to loan money to anyone to buy a house, 2008, 9, 10. It was like, yeah, I don't really care what your credit score is or what your assets are. You're not getting a loan. When you're looking at, banks merging, there's a lot of banks merging. There's a lot of banks. They say that there's about 168 banks on the brink of disaster, of course, which I believe. So I think when you look at that, like when you're talking about a commercial loan, you're talking about millions of dollars. How tight do you think these guidelines are going to get?
They're getting pretty serious. They're getting pretty tight. The banks are pushing back. And when you see banks pushing back, it tells the whole story.
Yeah.
But we saw a couple banks on the brink of collapse. I think Pacific Western in California was one, because they had they're really over leveraged on their commercial lending, and I actually thought they would collapse. I was looking at shorting their stock, and they offloaded a big portion of their commercial portfolio onto other banks. And so, these loans are going to be a problem with banks over leveraged. With these guidelines are to prevent those banking failures. The next step would be, the Fed step in, like a Fannie and Freddie for commercial, which we kind of don't want to see that. But I mean, that would be, I call that our doomsday scenario, right? Where everything all the banks fail, and we've got to have a system to sustain our commercial economy, and the feds take over, and all of a sudden everything stops because they're going to have totally different guidelines and new rules and regulations that everybody has to learn to navigate through before we can get going again. I don't think that's what we want.
Do you see us getting closer to that?
I hope not. If it gets to the point where the Fed step in, I think we're at a catastrophic failure level to where banks are just collapsing, and they're trying to keep our economy from plummeting. I hope we don't get there. But I think that's why they're being so aggressive on these new regulations and guidelines on these banks, saying that we've got to get you to implement these, or we're actually going to have to step in and take it over.
That's pretty frightening, actually, when you think about that.
That
For
is.
consumers, because we get a lot of consumers that watch this and that are thinking about buying a building or starting a business and maybe don't have their finances in order. Like, what would you tell them would be like your best advice right now for somebody thinking of that?
One thing we do with our clients is we sit down, we kind of go over their long-term plan. What's your plan in 5 years, 10 years, 20 years, 30 years? Do you want to own the real estate, or is your business in a sector that might be one of those trending sectors like drop shipping was, right? Where, hey, let's see how this goes for the next 5, 10 years. It may not be worth it to own a bunch of assets if this is just kind of a phase or a trend. We take a look at their big financial picture, right? And are you well capitalized going in? Can you handle those down markets? Can you handle these interest rate hikes? Things like that. If they're not ready for that, and they don't have a good sound business plan in place, usually we kind of sit them back down, either revise their plan or downsize and lease something instead.
Okay. And so when you look at the market, are there certain areas in Houston that you see are maybe getting hit harder with sales volume and sales value, like office buildings and such?
Um, you know, I like retail.
Okay.
It's been my favorite. Industrial's been my favorite as well. With retail, you've got, say, a 5 or 6 tenant retail center that gives you the diversity if one tenant closes up.
Yes.
If they're national tenants or they're large tenants with guaranteed leases, that gives you more safety as well. But you're compromising on your returns for your safety. So you may buy a 7 tenant multi-tenant property with national tenants, and you'll be getting a 5.5, 6% return. But you're safe with those tenants because they're usually recession-proof, dollar stores, some type of cheap dining. You're recession-proof, and you've got those long-term leases. Some of them will do a 20-year and 5-year renewal every full 20 years. I just built a shopping center up in Porter, and that one went from, it was initially going to be two 8,000 square foot buildings. That one went to 60,000 square feet total because
Wow.
we got a grocery store, and the financing, we couldn't get the financing on it, and the grocery store came in and said, we'll guarantee the first 10 years of the deal, and
Nice.
we'll sign a 30-year lease. And
Nice.
so when we took that back to the bank just basically told us, go build it. So there's ways to work around it. That was an ideal scenario. Industrial is kind of the same way. If, we see a lot of spec building, which is
Yeah.
developers just dropping buildings on the ground and waiting for tenants. With the new lending requirements, I think we're going to see that slow down a little bit. We're going to start seeing them build for tenants rather than just putting a bunch of shells out there and seeing what comes along.
What do you think the future of the office buildings are? Because you hear such conflicting information. You hear that a lot of the big companies are making their employees come back and work in the office because they're having to pay for all this office space. But then you hear that a lot of them are walking away from it. What's your thoughts on all that?
I'm hearing those same things. In downtown Houston, we've had some large companies move around into some new buildings because there's opportunity, right? Those new buildings are hurting also, so they're willing to give you a little bit more concession to get
Yeah.
tenants in, and some people are hopping around. So there's still activity. The big trending conversation I'm hearing is convert office buildings into housing.
I'm hearing
Um,
you
and I don't know if it's because I Googled it, but it's popping up on my YouTube feed and it's popping up everywhere I look. Because
Yes.
I'm genuinely interested in that, because we have an abundance of office buildings, but the cost of operating an office building is so expensive with the air conditioning and the plumbing and everything goes in there.
Yes.
Now you're talking about retrofitting individual units, individual plumbing, individual ACs, individual electrical. That's going to get pricey. So I'm curious to see how that makes sense. And we've got plenty of buildings around to do it.
We do. Do you think there's a demand for that though?
I think there could be,
Okay.
depending on how it's used. I think, if we're trying to solve an affordable housing crisis and we can convert an old building, or we're trying to, if we're trying to, one of my clients is a large senior housing developer. And so we go out and we look in large master plan communities and see where we can put a senior housing development in that
Yeah.
community. But if we're doing, and they're not affordable, they're $6,000 to $12,000 a month to be in one of those facilities. But if you look
Sure.
at creating an affordable component, would retrofitting a former office building make sense? If it's if government subsidized housing or something like that, maybe that would work. Because I mean, let's admit some of these old office buildings nobody will ever go back to.
No.
They're going to fall apart, right?
Yes.
And so we either tear them down or we retrofit them and make them useful for something else. So that'll be an interesting thing to watch if that happens.
And I think when you look at like cost wise, tearing down a building versus rebuilding it or remodeling it, I would imagine right now it would cost a fortune to tear it down and rebuild it because everything is so much more expensive than it has been, you know?
Yes,
And
yes,
your timeline. That's another thing. It's like your timeline is critical right now. I
yeah.
have dealt with a lot lately people wanting to do not service projects per se, but more in lines of like government housing, where because we've got a couple of buildings that we own and manage, and they want to come in and make almost like a treatment facility that has short term housing for patients and
Mhm.
parents or kids of parents that need help and are in counseling. And it's fascinating to me because number one, I didn't even think that was a thing, but it is. But apparently, there's government financing more options for things like that. And there are grants and things like that where people can start something and actually would benefit others. Are you hearing some of that stuff too?
I am. There's a lot of different programs out there. There's a few years ago, I worked on a program for the VA office, where they're creating treatment rehab facilities for veterans, and
Yeah.
so everything from veterans that suffered from PTSD to chemical dependency, and the the different the different variations of treatments and facilities were anywhere from like a group housing all the way up to institutional hospital type stuff. And
Yes.
so there is funding out there for Those grants are not easy to get.
Yeah.
You've got to find the right facilities. You've got to be in a major city like Houston, where you've got a large veteran population that needs help. And then you've got to convince these veterans that they need the help and they need to be in that facility. That's going to be the hardest thing. But there's programs for runaway kids. There's programs for there's I don't want to say there's a government program. I'm not sure of one, but I know there's church groups out there that
Yeah.
create programs for victims of trafficking and things like that. So there's a
Oh,
lot
yeah.
of these opportunities out there.
I think the more that we like muddle through whatever is happening in this world that we live in right now, that's absolutely chaotic in all kinds of financing issues. I think the more that we can come up with like brainstorming ideas to be creative to, because there's a need, like there's a need for these things. People are struggling. I think we need to learn how to come together and work together better. And
Mhm.
along those lines, just again, before COVID, it was pretty much imperative that if you wanted to do any kind of developing, whether it be commercial or residential, if you had a bank partner or a bank that you used, traditionally, that they usually will do financing. Because of all these mergers and acquisitions, are you seeing that pretty much go away?
Hopefully you followed your favorite lender and your favorite bank. We've got some great ones in Houston,
Yeah.
and they're still there. My favorites are Amity Bank, Frost Bank, Prosperity Bank, American First National Bank.
Yeah.
Those guys are still there, thankfully, and those relationships are still there. I think with mergers and acquisitions happening, we're going to see those. We're going to see a few of those happen. Thankfully, not locally yet. But if you've got those banking relationships, those are gold right now.
Yeah.
It may not be the terms you like, but as long as they're there and they know you and you have that history with them, you'll be able to continue working.
And it would probably be beneficial to be with you, of course, because you have relationships with these banks, correct?
Yes, absolutely. So I make our lenders compete for our business, but it's not really competition when they maintain a great relationship with our clients.
When I'm looking at like the future of real estate, and of course, this is how we pay for our families and take care of everything. And it is a different world that we live in commercial and residential. For somebody that's thinking of investing in commercial and in anything, I know industrial is a hot market right now, but in an office building, would you say they need to sit back and be patient and wait because we're just getting started on this demise? What's your thoughts?
Um, you know, I I like to kind of look at every individual's goals and what they're looking for, right? When I first got into investing, I was very, very active and hands-on. Now I realize that's keeping me away from making money and doing deals that support that, right? The revenue I need to buy my investments. And so I'm more focused on clients and kind of being hands off on my investments. So I've had a shift in my investment strategy. I look at things that are very passive now. Before I bought single family homes, and then when I got in commercial, I did warehousing and retail, but I was out there all the time. Now what I like are triple net ground leases. And that's just for me, and where I am right now is I want something very passive where the tenant pays their rent, they pay their taxes, they pay their insurance. If a car or a truck driver hits their building, they pay for that too. And all I do is just check my mail every month for a check. Some people want that. Some people need that. It's a little bit of a lower return, but it's a safe place to park your money. Other people want a more aggressive return where they have to be hands-on and take a little bit more risk. But that's up to every individual. I think what's nice is there's so many different ways to make money in real estate, whether it's residential or commercial, active or passive, different product classes. There's so many different ways to make money in this industry. There's a lot of directions you can go.
I love that. One final question too, because I see it in our residential side of real estate. We've seen a lot of agents leave the industry because number one, transaction count is way down, and they just don't know where their next deal is going to come from. In the commercial world, are you seeing a lot of agents and brokers leave the industry?
We are. We're seeing a lot of, I call them the old school guys. We're seeing a lot of the old school guys kind of step back, right? And it's, our industry's changed. Our industry's, technology's coming at us all the time, and I'm starting to feel like a dinosaur. I've only been doing it for 15 years, but I'm not able to keep up with the technology. So, but we see a new generation of people coming in that are younger, and they're aggressive, and they don't have any technology challenges. They're driving the technology, which is changing our industry. And that's the next big thing. I think it's normal. I think we're always going to have some people leaving, and there's going to be new people coming in. But I think this new group coming in is really, really rocking it and changing this.
I do too. I'm thankful, that I have you as a friend because I trust all of your insight. Number one, I know you study this stuff like crazy, but when people look at, real estate, they don't realize like it really does fuel our economy in so many different ways. And I think it's people like you that are out there educating people, and you're going to seminars and you're learning and you're involved in all these boards that help govern a lot of these things. I just commend you. I think you're very inspirational. Thank you for all that you do.
Well, thank you for having me. I appreciate you.
Hey, Mike, I know there's a lot of people out there that are going to have questions about this. I know there's agents that are going to have questions about commercial. What's the best way for them to find you?
Best way to find me is just shoot me an email. My email is mkwong@kw.com, or you can shoot me a text. I can't always answer my phone, but you can text me at 713 935-5800.
And you guys, again, he's been doing this forever. He's very involved in the commercial industry. So if you've got questions like, should you buy a building right now? Should you wait next year? Should you rent and not buy? All of those things are super important right now, especially when you look at, like he said, sit down, like, what does 5 and 10 years look like for you? It's important. Yeah. Thank you, Mike, for being here today.
All right. Thank you, Tricia.
Bye, you guys.